Hello guys, glad to have you on board again today. I thought about doing some kind of an update to you guys on a high level overview of what the crypto state of the market is. Because, of course, I've been covering it quite extensively for the French user base in the Discord and elsewhere, but figured out somewhere you guys were lacking behind for quite some time, so I wanted just to set everyone into the same page here. So we're going to review some of the models that have been shared before and well documented in the English format as well. But the thing is that we haven't had that high-level overview synthesized version of all these models and the endgame vision going along with them, or at least the risk limitation forecast that comes along with it. So that's exactly what we're going to be doing today. So let's jump into charts now so that we are starting in the right foot. Okay, so remember, I want this one to remain kind of high-level overview. So for those who are not familiar with the indicators or stuff like that, that doesn't necessarily mean too much. I'm going to straight to the conclusions in here, not arguing too much about what it is. People who are familiar with the strategy already knows all that stuff. So I want to quickly roll over this. So TLDR is that if we have a look at the crypto total in its general form, there is an impending trend structure that has been constituted by the emergence of a flat range in here throughout the period of the 2015 bear markets, followed by the pretty damn speculative 2018 bull market. As you can see, momentum has gone through the roof for an extended period of time since basically May 16th, 2016 to January 2018. So pretty much an extended period of time in which the momentum has just gone parabolic. Though, of course, the expense of it is that we've gone straight out from bullish to bearish and gone to oversold in just a span of a few months. Very, very dangerous and painful bear market. And for those who were there back in then, remember, I warned you about that thing. They told you that this would V-shape reverse and there's no way for you to catch the market up. But somewhat I took the hard time of saying, yeah, 20K might be the end of it. So history set the records that, of course, when we went into the following bear market, this was exactly the moment for us to load up on the valuable assets, not going into the shitty end of the risk curve. And then, of course, 2021 came in. Heavily surprised everyone, me included, by the speculative nature of it. But of course, I mean, remember what was the time back then? We were actually locked up in our houses with free cash on hand. That was very, very much unconventional market conditions. And well, we've seen that outrageous mania of certainly the good assets, the ones that are expected to surge, like the Bitcoin, the Ethereum, and eventually a bunch of others, have gone through the roof. But with them, a whole bunch of speculative assets came along with, and boy, that was kind of heavily speculative. The true reality out of this, that means this over-speculation came to an abrupt end, as we discovered all those uncollateralized loan or just plain scammers, just like the FTX and the like. Though liquidations came along with that, and all the over-leveraged traders finally found their way into being forced out. Of course, money been changing hands, all sorts of stuff. We've gone through another set of a painful bear market following these massive liquidations. And now, here we are at the recovery stage. That means we know one thing for sure, the bottom is in, but that doesn't necessarily mean the bull is out. And people think of it that way, and this chart says otherwise. This chart says, certainly in the distance, we can target somewhat of a $7 trillion market cap, potentially even higher, but the value is going to come along with it. That means this time around, we're probably going to break out and leave an untapped trace beyond that. That means the previously traded level was somewhere like 3 trillion. We expect this one to be 7 trillion plus and stabilize around that area, but not retrace further below 5 trillion. That means it leaves an untapped area of somewhat 2 trillion. It can be a bit less than that, but this should be what we generally tend to call a single print. That means it's an area in which only one way liquidity will be dealt with. It only goes up and will never retrace to that price to the downside afterwards. So accounting for this, I have a counteractive argument to say, which means this breakout signal in here says actually we're going to have to retrace to that level. If we try to break through this target, by 2026, we're going to have to get back there. So it contradicts the previous argument. It said the technical structure of this trend says when we break, that's the massive breakout of this structure. The third one, and the third is the charm. And this one will leave us to the final target of the addressable market share, which is expected to be 7 trillion above, and to be a stabilized value with an untapped retraced area in between. And this says we're going to have to retrace. So it tells me a conflict. So conflict doesn't mean it's not going to happen. It just means I have to raise the evidence of risk limitation. That means there are some things that don't line up. Therefore, it's not like, okay, open door to the all-time highs, we're going to go there, Fox, just because people said so. It's not how it is. The momentum might be crazily high again, just like it used to be on previous cycle, but this kind of mandate to say whatever the past was made of is presuming the future will be similar is pretty damn dangerous claim in the market for those who are experienced enough to have lived through multiple cycles, traded multiple types of asset classes, and traded throughout the years. So all these things we all know for sure. Professionals know that nothing is ever for repeat. It rhymes at best, but that's all there is. So I see a lot of assumptions when on the other hand the charts tells me something's catchy. Something isn't that easy. So I wonder why, then, when I look below the surface, some of the actual fundamental metrics that led us there show signs of a kind of state of crypto index it would be going in the right direction. If we're going at it, that says basically, yeah, we're in bull markets. But if we look below the surface to actual underlying fundamentals that led us there, it's pretty much innovation indicator side. Of course, the adoption is going higher as well, but we'll see that there are questionable fundamentals on that front. If we look at it, you would see contract deployer are really having some questionable statistical outcome here. And if you dig below the surface, you would definitely see that most of those contract deployer are in one chain, Solana, which has been, to me, the most stupidest reputation to fake out the numbers. It's happened in 2021, it's happening again, and if you just find some worthy sources who look below the surface, you'll figure it out that most of these contracts are replicated shit trading meme coin valueless tokens. So it's just absolute meme coin stupidity, though most of those actual contracts, and not all of them, but most of them are centered in a single blockchain, dealing with a single kind of asset class, pretty damn smelling like trappy stuff. So it's kind of questionable and question around sustainability of this actual thing. You can fake your way into the market, like fake it till you make it, but the problem is you can't fake it for too long. If this thing is just fake and if there's no catch up to make it, well, the fake it is just going to be it. You're going to be caught up faking it. And fake money allocation goes straight out to liquidation. We've seen that in the past. You can fake your way into the market for a few months, you can lie, but inevitably, if it extends over time, you're going to be caught up. I think that's a dangerous game, to play the same old fake it till you make it narrative. And it's exactly what Solana has been doing. The active addresses are lined up heavily in the same area in here as well. Lots of them are in Solana. Same goes with those fake transactions. I'm very concerned about the fundamentals which we stand on for now on. That means the momentum we've created is somewhat questionably speculative. That doesn't mean it's fake. It just means for now it's fake it till you make it. And it better have to be making it. Because if it don't, liquidations. And we have seen in the past, and it will happen again. Anytime people say, no, this is where we get wrong-footed and fucked up. The signal that I see here raised the alarm to say, when I look at the crypto total, things don't line up for a bull market that just plays like that, like magic. I see some risk limitation that needs to be performed. That means assessing for the probability that these things get to another liquidation phase before the actual true bull market kicks in. And it may take some time before we range a bit and get another breakout attempt that this time around doesn't show up with that kind of square signal. Okay? So all I'm saying in here is momentum is there, it very likely have to stay there. Because if we stop that momentum and if we get out of the overbought area without breaking this target, not going to be pretty, folks. We're in an area which is a selling area. That means buying in here is outrageously stupid. And if those who got us there are standing on questionable legs, and if they start to take profits as others didn't came in, there will be not enough liquidity for them. Okay, and I'm going to state it very clearly, we are in a stagflationary probability environment. Some people call that the banana zone ahead, like printing to infinity, money is going to be freely circulating again, rate cuts, whatever. That's my job, folks, okay? And I'm speaking with quite a lot of other money managers, and we all tend to agree that this is nothing but entire bullshit. It's not going to be printing money to infinity for whatever reason, and if we do print money, it's going to be for the wrong reasons. So that means shit hitting the economy. And if shit hit the economy, that means recession and not necessarily going to infinity and assets go to bonkers. It's not that type of thing. This time around, the money might eventually be printed, but in a targeted way. I mean, going into specific areas of the market, and certainly not just sending fucking paycheck to people who are locked in their homes. It's not 2021 over again, folks. And you might fake it into Solana bullshit, but if it doesn't transpose into actual adoption, this is only bullshit. And that's all there is to say. And bullshit can last for 6 to 7 months, can hardly transpose for another year if it's not standing on durable legs. If this fake it till you make it doesn't make it, we're gonna have to unwind the fake it money. So it's really, really plain simple. The second thing we need to assess is the Bitcoin dominance, because there is another big stupid narrative in which somewhat crypto is all around Bitcoin because Bitcoin has the ETF, and this is the only true adoption that we had so far. Even though this claim is true, and definitely is, for now on, the only visible adoption we have is on Bitcoin. But it is not a non-chain adoption, it is somewhat of a custodial adoption that is just pretty much of a hack than the actual crypto vision, more than true adoption. It's just people want to have exposition to Bitcoin, but not necessarily participating in the blockchain adoption. So that's really one thing that we need to set aside. We're talking in here about blockchain adoption, and I don't think Bitcoin lines up into this narrative. The second thing is certainly Bitcoin has a role to play, but there's one inevitable question around that. I mean, there is clear bearish trend in the Bitcoin dominance, and yet I see people forecasting that we're going to go higher and higher and higher, like trying to find the market top until, of course, inevitably it reverses. So to me, this is really a questionable narrative to be and stand on, because I've argued severely and repeatedly using models that I've built to say the crypto market is facing a fundamental problem. There's an entire video regarding this and explaining how this model works to say very simply, high-level overview of what that model is. And if you want more information, have a look at the video, which is on the YouTube channel regarding this. TLDR, we face a fundamental problem of blockchain. Just like you can try to tell me you can do whatever the fuck you want with physics, there are fundamental laws you can break, okay? Conservation of energy and all sorts of stuff, these are the things you can't break, okay? You can try to pretend whatever the fuck it is, you're not going to be making it, because facing physics limitations is nothing you can break beyond. So, I think cryptocurrencies have encountered some more fundamental problems of their own. Among them, what likely is the trilemma, the blockchain trilemma. That means we can hardly have one system that can provide some solid security guarantees, durable security guarantees, while in the same time being able to scale very, very high, and then finally remaining decentralized as they do. So that's a fundamental problem we face. That means you can somewhat try to achieve two of those three, but you're going to have to sacrifice somewhat of the third one. There's a trade-off to be made to maximize two of the three axes. So that means one thing, we're facing a triangular type problem, a threefold kind of system. And well, just like we tend to solve fundamental problems of the universe or physics or whatever by using symmetries, which seems to have intrinsic property of fundamental stuff, well, I decided to use the same thing. And I said, okay, we've had a threefold problem, though how do we solve threefold symmetries? Well, that generally means a threefold symmetry has 6 permutation. That means they are 3 axial symmetries in which you can roll out the triangle into itself and have a projection of itself that creates the same fundamental triangle. And there's also 3 rotational symmetries. So you have 6 permutations, 3 axial symmetries and 3 rotational symmetries. That meant to me that if we want to solve the fundamental limitation of this blockchain trilemma, it's probably going to be using a 6 permutation, like 6 fundamental pieces of the system to solve the equilibrium problem that we face. As there's no single one being able to do all 3, it's probably going to take no 3, but 6 to do it, because the different sets of trade-offs are going to be made to make the best out of 2 by sacrificing the third one isn't possible. You can't be scalable and decentralized without having a bare minimum case for security. So that means you can't just do 2 out of 3 and let the third to the other one. You need to be at least bare minimum in the third as well. So you have to make some trade-offs. And that's been the standing leg for this system to be built. I'm not going to go into the detail, but it's basically using those axial and rotational symmetry to try figuring out what are the best solutions to solve the trilemma. By having both actual competitivity, which means there is a symmetry between what is in here, and their trade-offs are symmetrical one to another. They are direct competitor trying to fight for the same axis by making different types of trade-offs. And the same goes for the decentralization axis and the security axis. What's beautiful about this system is that it's just been blatantly proven right so far, and outrageously correct. To decide that, well, as we get through the blockchain adoption cycle, we've had Bitcoin all along. That was the first one, the kind of first discovery of the system, and then we start to emerge into the first problems. Well, what the fuck can we do with this system? Are we locked into those small block wars and whatever? We had that big block, small block war, and the end of it has been small blocks. If we want to maintain the core security level of Bitcoin, we need to remain this small block. This is how a different trade-off has been emerging out of Ethereum's side, and there's been that huge battle against these two systems, all pretending to fight against the other, saying, well, now that we have Ethereum, we might not need Bitcoin anymore. Just like the Bitcoin guys have said, we don't need Ethereum. We're going to be able to do the same thing in the distance. Truth is, it's not impossible. The trade-off that Ethereum has done can't be done in Bitcoin. We've seen people trying to stamp proof of stake into the proof of work system. It's not worked so far. All the trade-offs that the stacks on whatever are doing, if you listen to true Bitcoin maxis, they'll tell you this is full of shit and it doesn't take the security properly. So this is really a big problem we face. That means Bitcoin and Ethereum are fundamental pieces. You cannot destroy one and kind of copy it into the other. It doesn't work. So we have the two fundamental pieces. What's beautiful about that is that the 2021 market has emerged the same kind of similar behavior into the scalability axis. We have on one end Solana, going bonkers, faking it till you make it, but still, the infrastructure is good. Don't get me wrong. All I'm saying is the marketing is full of shit, but the underlying fundamentals are solid. But the actual scalability axis is not about Solana. Solana does have to make some trade-offs, despite the fact that they claim they're not making any. Well, this is bullshit. They do make some. The truth is, the layer 2s have been violently being vocal against Solana because they make different trade-offs. But the truth is, they're making the same kind of similar symmetry stuff, actual symmetries. The trade-off that layer 2s are doing against Solana are exactly the same as the trade-offs that were made for Bitcoin and Ethereum. And it's staggering because it repeats over time. There is this kind of stupid big block to small block war in which the small blockers are somewhat like the Ethereum, who says, yeah, we might want to have this modular architecture with multiple sublayers and so on, where Solana says, no, go big. We go big. No, it's not. I mean, we know for sure that these two trade-offs are going to have to be somewhat of the two faces of the same coin. To scale, we're going to need both and those trade-offs. Solana is going to face limitations, no matter how stupidly they try to pretend they will not, they are. And on the other hand, layer 2s will as well face some scalability limitations, and trade-offs are going to have to be made. These trade-offs are different but complementary. That's what you need to take out of this. But the last piece of the puzzle is that, well, we still need to figure out decentralization because, well, we didn't so far. And we know who probably the contenders are. There are different sets of trade-offs on the decentralization axis, meaning that there are two underlying fundamental properties of decentralization: the interoperability, because if you replicate something horizontally, you need to have them interconnected to prevent fragmentation. Same thing goes for this. If you connect everything, the problem is, how do you have privacy on these systems? How do you enable some permission private environment and some sorts of stuff? So there is a fundamental opposition between the two. You can't be fully interoperable and private, though you're going to have to face this asymmetry, and I very well then bet that we're going to have two strongly opposing opponents in here saying, yeah, I have the solution and the other one is a full of shit, by making different types of compromises, by looking under the hood of how those compromises kind of actually differ one to the other, but in the end, fundamentally needs both. And I very well them say, I think we know who those two are together. It's the Cosmos ecosystem on top, fully native interoperability with sovereign consensus, interchain security, mesh security, all sorts of stuff. These are the bottlenecks of the actual Cosmos problem scaling. And on the other hand, we've got the eigenlayer stuff, which is basically, well, we lack of actual consensus. Is this kind of intersubjective stuff. Well, this is great. It allows for privacy layers to be emerging out of this. And that's great. That means we actually may need both, but we don't yet understand it. So that's one thing that I'd like to share. I think this cycle is going to be all about decentralization more than it has been for scalability for the previous cycle. We are maturing. But most importantly, what this thing tells us is that if we figure out the decentralization players by the end of that cycle, we will have a cohesive ecosystem. For the first time in the entire crypto history, we would be able to solve the blockchain trilemma, but not with a single monolithic chain, with a combination of 6 balanced chains fighting both symmetrical axes, which means they're fighting against each other for two different sets of compromise that are actually mirrors of one another, and there is the rotational symmetry in which we assemble a decentralization, a scalable, and a security access player all together to create bundles of solutions. If your actual solution requires more security, you're going to align more with one of the two security providers. If you need to scale, you're going to use one of the scalable solutions, and you're going to have to create this modular architecture in which you pick a little bit of everything to create a blend that corresponds to your own personal needs. And this is how you end up with a scalable, decentralized, and secure public infrastructure for value creations to migrate into this digital world. We need it. When we'll solve those fundamental problems, it's when we'll be able to fully deliver the promises of cryptocurrencies and blockchain in general. I don't think the future is made out of 1,000 tokens. I don't nearly think so. I think the future is made out of 6 blockchain infrastructure, fundamentally complementary and symmetrically balanced within each other, fundamentally solving this problem that blockchain has. And then the whole bunch of economic adoption will go along this kind of mesh of different trade-offs, trying to figure out which one suits them the most. But there's no one winner takes all. It's not going to do it. And people don't understand it. If we have that public infrastructure, there are probably no more tokens to run out there. No more layer 1 competing blockchains, whatever. We're finally going to have cooperations. That means, from now on, buckets, this kind of constant, stupid cycle of booms and busts with outrageous amounts of debt money going into the system to finance another copy of the same stuff just to try selling a token in the end, just indefinitely repeating that creative destruction cycle of competition. I think we won't need that anymore. We finally have this locked up infrastructure system, cohesive, coherent, and solving true scalable problems. By doing this, we would be able to tap blockchain into the real world, to finally connect it to real activities. Though we won't need this kind of fundamental external input capital with debt money and VC stuff all over the place. We're finally going to be able to have fully funded and operational public infrastructure. And on top of it, the private capital will come in and bring their actual revenue shares. That means we don't need to create fake tokens out of infinity, inflated away, or whatever shit like that. I think that's the last time around that we do this. No more stupid competition of endlessly copying the same public infrastructure with open source code and trying to do it 10 times to figure out who is the best one out of 15. And by creating 15 times the same market cap, just set the damn next bear market erases 14 of them and only one remains. I think this time around, the 6 fundamental forces will be there. There will no longer be booms and busts. They will be able to fully fund themselves out of their operations due to the services and the utility that they offer for the ecosystem as a whole. No more copy-pasting endlessly. They will have network effects and adoption. And by doing it, we're talking about Pareto-type power law distribution of adoption. That means it totally erases potential competition to emerge in the system. If you have something that you think is better than something that's already existing, instead of leveraging $200 million to launch your own fucking token, you will go to this blockchain and try to cooperate. And if you don't understand that, well gosh, you're going to be harshly proven wrong in the next cycle. Anything that doesn't bring utility is a Ponzi scheme. It's something that just basically go up, go down, and the fundamentals of physics just tells us one thing. There's no more money than what's been put in. And if you go into some stupid meme coinery or whatever, you have to understand that. If you've put a $10 in, and the number says you could get $100 if you sell now, you only get that money if you sell. And if you sell, someone has to bring the $90 that are there. And that means if they haven't spent it now, that's a future expenditure. That means those who will have to buy at a later date are already losing those $90. Because in the end, there's no money that's going to be created out of this. There's no service, there's no utility, but distributing what's in to whoever asks out the first. And if you made 10x return, you're going to have to scheme not other people like you. You're going to have to front run them. That's a time battle. That's a musical chair game. It's a fucking Ponzi scheme. It only raises so long as new people go in and others preceding them don't go out. By the minute they go out, there's not enough money for everyone. The Ponzi collapses all on its own. We know that, damn it. It's not going to be any different this time around. So please, guys, try to make it easy on you, okay? We know one thing for sure. This cycle of boom and bust and kind of constant VC money to momentum money transfer might be coming to an end. Because this time around, we'll finally have a sustainable, cohesive ecosystem of naturally growing, that means profit-seeking and making companies who serve true utility and will see legitimate, genuine adoption. How the fuck do you think endless VC money, boom and bust debt cycles of overhawking peaks of hypes will sustain when true fundamental force growth will be there? I think it doesn't stand a chance. That's why I think this is the last cycle. The only uncertainty we have remains the decentralization axis. Once we figured out the winners in this game, I think that's the last cycle. That's the reason why I would argue about saying I think the dominance will go down, because there's innovation to be made and we need to figure out new players, and they will eat away on existing market shares, and they're eating away all market shares. The Bitcoin, the Ethereum, the Solanas, all those who are already locked into their wealthier positions are gonna have to cede some space to the others. They're gonna have to give it away. So I think dominance is inevitably going down. As of right now, Bitcoin weighs 55% of the crypto market. I don't imagine it going anywhere beyond 20 or 30 this time around. Might not necessarily be 20, but I think 30 is a reasonable area for Bitcoin to go by this cycle. I think that doesn't mean Bitcoin won't reclaim some of it at a later date, but I think this is where we're headed for this cycle. So sorry for the Bitcoin maxis. I think this is definitely a wrong move to think that the only money that goes in is into Bitcoin. The adoption is unstoppable. We are going to find new frontiers, and I think the next frontier is in the decentralization axis. We know who the probable candidates are. We already know them. They make different compromises. They're probably going to fight each other like hell, but they're actually complementary, and we need both. Just like we would like to understand that fighting against Solana versus Layer 2 is a stupid battle. We need them both. It's actually fundamentally needed to solve the blockchain trilemma and offer a comprehensive, cohesive ecosystem for crypto to scale and adopt the real world use cases. That means last cycle for infrastructure. No more VC money all over the place. And to conclude, if we go it back down to the crypto total as we stated before, I think that some people have put themselves into a front-running position, same old leveraging trades, thinking that they can front-run the opportunity to get rich quick. If we're in a stagflationary environment, it's not going to be pretty, folks. So I think maybe another round of liquidation might be around the corner. Among those liquidation candidates, not all of them will go down. I think just the ones that have been overarchingly stupidly speculative will. And we know who those are. They are the ones that don't stand to be the winners for now. They are all the ones you know of. They are the Pepes, the Flockies, the Justme, the Casper, the Solana, the Fetch AI, all of these guys, at the exception of Sol, which we said is likely a valuable asset over time, but might be overvalued in the short run. That means the best case for Solana to me is to stay where the fuck it is, not necessarily going crazy like $300 like people think it is. I think it's already taken significant amount of risk to front run the opportunity by faking it until you make it. If Solana doesn't make it quickly, the fake it is going to come even more obvious as the time passes. And if we're locked into another kind of range mode for another 6 months to a year or even more than that, then it's going to come blatantly evident that people have tried to front run and faking it. And if that comes to light, liquidation will come along as well for Solana. So I'd rather like to state the obvious. It's a high risk, high reward game. But as most of the gains are already there, what's left for them to pick up but the risk? So I wonder now, I just wanted to voluntarily raise some negative consequences in the picture, because everyone is overarchingly bullish now. And my job is not to say they're wrong, I'm right, but just to bring it a bit more nuance to the picture. And that's exactly what I wanted to do today. So I've been voluntarily insisting on the potential negative effects. Don't get me wrong, the underlying trend is bullish. I'm, of course, very much in line to say we will get to the $7 trillion mark. The concerns I have is people think it's inevitably going to happen now. They faked their way into front-running the opportunity. And I don't like that. If stagflation is the motive, and if the market starts to U-turn, the crypto will as well. And those who've gone up are going to be the ones that will lose a lot of money. So if you are locked into those heavily speculative name musical chair game, you know what to do. All right? I'm going to leave you guys with that. I hope that was an interesting endgame vision of stuff. So I've warned again, just like I've warned in 2018 that the market top was nearly in. Just like I warned in 2019 to say, don't be stupid enough falling for the narratives of these things is never going to recover. It will if you pick the right names. Just like in 2021, I've warned about the stupid mania of all these stupid shit of NFT stuff, whatever. All these things have gone to near zero value today. I warned you now, the meme coins go to zero, that's inevitable. They bring and bear no value, they're no more than the Ponzi schemes. Be very cautious with all those chains who lie about their scalability capabilities. They are heavily centralized, and that stands both for Solanas and Layer 2s. That means this cycle's innovation runs around decentralized scalability. And there are two big leaders in this game today. The Cosmos ecosystem with their 10 domain consensus distributed horizontally and interconnected with the IBC stuff. And there is the other version of it, which is the intersubjective system that EigenLayer is doing with restaking, which is a shared security system with a native interoperability as well. But of course, it all comes down to a centralized piece of software, which is the EigenLayer stuff. Though we'll see that there are different trade-offs on them. The Cosmos ecosystem will be faster in terms of interoperability. We'll have to make some trade-off. EigenLayer will be somewhat more questionable kind of collateral stuff if they want to interoperate fastly. Different sets of trade-offs to achieve the same end game, and we need them both. You need to understand that. We'll put out a hell of a lot of educational video regarding these two ecosystems in the forthcoming months, because I think this is where the essential education needs to be pulled out. Just like I will try to educate you deeply on partial set security, which is the upcoming features of the Cosmos Hub, which is a game changer for the Cosmos vision of stuff. So I'm going to leave you guys with that. More to come, but this one I wanted to do it a high-level overview to set the stance on the risks that we're pending right now and the fact that you might want to risk limit against the possibility of another 1 year down move, consolidating, flushing away the speculative capital of all those who've tried to front run the opportunity. There is hell a lot of VC money out there who is misallocated. And if we don't go up, it will have to be liquidated. Though that means timing is of the essence. If you're patient enough to say whether it is now or in another year or so, it will go up because it sounds like it will. It's just a matter of time, and those who say it's going to be happening now, I tend to say they're probably wrong, because what I have in front of me doesn't suggest such a thing. So that's it, guys. I'm going to leave you with it. See you in another video. Bye-bye.